Microsoft presented earnings earlier this week, and it is looking really good. Right off the bat, we see that Microsoft beat on both the EPS and revenue, with a decent margin as well. However, they forecasted a slower growth in the Azure Cloud segment for the second quarter. This resulted in a 7.5% drop in stock price right after earnings were released. And if we zoom out a little bit, we see that Microsoft was already coming down a bit lately in terms of stock price. And we all know that not too long ago, Microsoft stock was at a premium price. So my main question for today is, could Microsoft be in the buying zone? Well, by the end of the video, I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. But first, let's dive in the recent earnings report. As mentioned earlier in the video, Microsoft presented a solid quarter, where they beat on EPS and revenue. Looking at the actual numbers, we see that revenue is up 16% year over year. And to me, that's pretty insane for one of the biggest companies in the world. Productivity and business processes has the lowest growth year over year, but still at a solid 12%. Gross margin is up 13% year over year, but the gross margin percentage is actually down 2 points, so this is something to keep your eye on. It's the same situation with the operating income, up 14%, but down 1 point year over year. Net income is up 11%, and EPS is up 10%, and down the line, these earnings are looking really good to me. Looking at the productivity segment a bit more in detail, we see that revenue is similar to previous quarter, but most lower versus a few quarters ago. So again, keep your eye on these numbers. The interesting part is that net income is increasing here much faster than the revenue, so margins are growing in this segment. Looking at the intelligent cloud segment, we see that growth is still really high with the Azure segment, with 33 to 34%. But the other subsegments are hardly growing. Another thing to keep your eye on is the fact that revenue is increasing at 20%, while operating income is increasing at 18%. Margins are decreasing here. The more personal computing segment is increasing again in revenue, which is really nice. However, margins are decreasing here as well, mainly driven by the Activision acquisition. Looking at the outlook for the upcoming quarter, we see that Azure growth is expected to be around 31 to 32%, which is what most investors didn't like, since this is slightly lower than the current growth numbers. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Microsoft is a 3 trillion market cap company, making them one of the biggest companies in the world. PE ratio is at a shy 34, indicating that they are trading at a premium price. Later in this video, I will show you my 3 price targets for Microsoft stock, so make sure to watch until the end. Revenue is at 254 billion, and in this graph we see that revenue went up in the long run, and it is growing really steady and consistent. It's one of the only few bigger companies in the world that is still capable of growing at a really high pace. Gross margins are down a lot in the long run, but ever since 2016 it is increasing again, which is the positive thing here. But let's keep our eye on the recent decrease. Both the operating margin and net margin are showing a similar trend. The EPS is going up in the long run. It is actually looking pretty good to me. Especially the recent years show us big increases. Analysis expect that in the coming years EPS will grow at really high numbers, in a range of 10 to 22%. We also see that it is expected to slow down a little bit. For the revenue, it is also looking pretty good, with 12 to 16% growth in the coming years. And again, we see that it is expected that growth will slow down over the years, which only makes sense to me. It's one of the biggest companies already, so it will be harder to keep that 20% revenue growth every year in the future. Return on assets is sitting at 18%, which is a really great number. Return on equity looks really good, and the most important number, return on invested capital, is sitting at nearly 18%, which is a great number. It is lower versus the 5-year average, which is something that I don't like. Current ratio is at 1.3, which is a decent number. Nothing really special to mention here, to be honest. And right now, Microsoft had 97 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Microsoft has 78 billion in total cash, so they can almost pay down all of their debt. This is something that I really like about this business. They have plenty of cash on hand. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is looking pretty good. Shares outstanding are decreasing, which is something that I really like. However, most recently there were two small increases, so keep your eye on this graph as well. Because when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the P/E ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 0.8%, which is a decent number for a tech company like Microsoft. Annual payout is at $3.32. Payout ratio is around 25%, which is looking pretty good. There is plenty of room to grow the dividends, but also to grow the business. The 5-year growth rate is at 10%, which is a great number. On top of that, they have increased the dividends for 19 years in a row. In here we see that Microsoft did increase the dividends at a decent pace historically. I wouldn't mind seeing a slightly higher dividend growth, especially since payout ratio is coming down a lot in the recent years. So there is plenty of room to grow the dividends at a higher pace. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation that can be highly impacted by results, but it gives you a rough indication. It's expected to increase at a decent rate from here. And overall these dividends look really good to me, but how about the historical returns? I decided to compare Microsoft stock with the overall market, in this case the S&P 500. On the 5-year chart we see that Microsoft crushed the S&P 500 with nearly twice the return. And keep in mind, this graph is including dividends. On the 1-year chart it is looking completely different, with the S&P 500 having twice the return. Ever since late June the returns from Microsoft dropped drastically. On the 6-month chart it is perfectly visible. The S&P 500 had tripled the return of Microsoft. On the 1-month chart we see that Microsoft actually had a minus 2.5% return, mainly driven by the recent earnings drop. Bottom line, in the past 5 years, Microsoft was by far the better choice in the long run, but in the short run it is really lagging behind. So could this be the perfect time to buy Microsoft stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 36, 38 and 40%. For the free cash flow margin I'm putting in 30, 32 and 34%. For the PE ratio, I'm putting in 23, 25, and 27. For the price to free cash flow, I'm putting in the same numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Microsoft stock is around $410. I hit analyze, and we see a lot of red numbers. We have a low price target of $231 to $277. We have a mid price target of $305 to $362, and we have a high price target of $400 to $470. And I'm going to make a bold move here. To me, the high price target is the most justified, indicating this stock could be undervalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Microsoft is that it is one of the bigger companies in the world that is still growing at a really high pace. This justifies a premium price in my opinion. I would love to see much lower prices with Microsoft, that's no denial. But I simply don't think we are going $100 or $200 down all of a sudden. Does that mean that you should buy Microsoft regardless of the price? Absolutely not. Personally, I do think that Microsoft is looking really good in terms of valuation, fundamentals, cash and dividends. To me, this means that I'm planning to add 1 or 2 more shares in the coming period. Basically, I'm buying at a really low pace, and whenever the stock price does drop a lot, I'm planning to buy much more. So, what are your thoughts on Microsoft stock? Let me know in the comments down below. And remember to always do your own research and never fully trust what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.